Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1594A, and today's date is June 18th, 2018, and the title of the episode is, How Do You Destroy the Central Bank System? Destroy the Currency. Let's get into the economic collapse financial news. Now, the central bank of all central banks, they came out with a report today letting everyone know that cryptocurrencies can never be a currency. And they created a document. It's called Cryptocurrency Looking Beyond the Hype. And it was released by the Bank of International Settlements. And it explains the history behind the technology and analyzes cryptocurrencies to see if it can actually become a currency. And when you really think about this, the central bank, who doesn't want to give up control of their currency system, is analyzing another currency system and letting you know that it's not a currency. That's pretty much what they said because of volatility, scalability, it'll bring down the internet. They're using every single excuse. Now, think about what the central banks have done since the beginning. They demonized cryptocurrency. They had a huge amount of dumps, which made Bitcoin volatile. And remember, Bitcoin is not all of cryptocurrency. It's the one that everyone knows about. And this is the one that they could use to make everything look unstable. And basically, this is what they've done. Now, they demonized it. They made it look volatile. And they're pushing the idea that this could never be a currency. This is why the Fed was out there. Many different talking heads were saying that, this doesn't meet a currency standard. Now, again, this is coming from a central bank. They don't want to give up control. They love control. And they're trying to tell you that there is no other system but theirs, which is absolutely ridiculous. Remember, do you really think the Biz was going to come out with a report saying, hey, cryptocurrencies, this is a perfect currency solution. We should all move to it, and you should drop what we're using right now? No, of course not. Even if you created another currency that they didn't control, they would tell you that that currency was no good. And even if you made it out of paper and ink and it was centralized and you were creating it and the government supported it and the private Western central banking system didn't control it, they would tell you that that currency is not a real currency, that you can't adopt that. You need to adopt theirs. This is what they've done in the past. This is what they're doing right now. And once again, the central banks, they do not dictate to us what is or isn't a currency. The people decide what they would like to use. And what they're trying to do right now is they're trying to basically stop what is about to happen. They don't want people to decide. They want to decide for you. So they're heading this off with this report. And this is exactly what they're doing. Now, Jack Dorsey, he came out and he did a little tweeting, and he basically mentioned something called a Cash App, where you can go and you can purchase Bitcoin and sell Bitcoin. This is, I think, in New York. And all of a sudden, cryptocurrency, that it jumped. But once again, what is happening here is more vendors, more corporations. They're all looking at cryptocurrency because, first of all, it's not difficult to adopt. Second of all, it doesn't use as much energy as everyone thinks. Think about all the electronic appliances in your house that where you think they're off, they're not. They're all still running. Even though you shut down the power, they're all still on, draining energy. Do a little experiment. For a couple of weeks, unplug everything when you want to turn it off. And at the end of the month, do it for like a month or so and see what your electric bill is. So your TV, your DVD player, your computer, unplug the power cable completely. Check it all out. See if you're using a lot of power just with these devices. Now, think about it. Think about how many people have the phones, the computers, and all these other devices running all the time. Even though you think they're off, they're not. They're still draining power. And multiply that by the number of homes compared to the number of people that are mining cryptocurrencies. So you can see right now, everyone is using a lot of electrical power. But what they're doing is they're using this as an excuse because they're trying to figure out a way to divert everyone away from cryptocurrencies. This has been their plan since the beginning, and this is why they came out with this report. And if you want to know more about cryptocurrencies, you want to learn about cryptocurrencies, you can go to the cryptocurrency school, which is at the X22reportschool.com. It will bring you to the website, and you can read all about the school. You can read about the trading room there, and it will explain everything to you. Now, here in the United States, we understand that the economy is not doing well. We've been tracking this. We've been looking at all the statistical information, even the fake information that the government puts out, the Fed puts out, and even the corporate media is reporting on all these manipulated numbers to make us think that everything is great. But when we start to look at what is really going on in the economy, we start to realize that things are not well at all. The National Low Income Housing Coalition, they came out with this annual report. And what they're saying is that there's a gap between wages and the price of housing across the United States. Now, I don't think this is going to become as a shocker to anyone. We've been talking about this for a very long time. Remember, there's bubbles in the market. And since the 2008 crisis, where housing came down, rents went up, and now we have housing being pushed up. Rents are still up there. They are coming down in many different areas. But the report is saying that it's such a huge spread that people cannot afford anything. Now, the report's housing wage is an estimate of what a full-time worker on a state-by-state basis must make to afford 1 or 2 bedroom rental homes at the Housing and Urban Development fair market rent without exceeding 30% of income on housing expenses. With decades of declining wages and widening wealth inequality via the financialization of corporate America, and thanks to the Federal Reserve's disastrous policies, the recent insignificant counter-trend in wage growth for low-income workers has not been enough to boost their standard of living. The report finds that a full-time minimum wage worker, or the average American stuck in the gig economy, which we talked about before, cannot afford to rent a 2-bedroom apartment anywhere in the U.S. According to the report, the 2018 national housing wage is $22.10 for a 2-bedroom rental home and $17.90 for a 1-bedroom rental home. Now, across the country, the 2-bedroom housing wage ranges from $13.84 in Arkansas to $36.13 in Hawaii. The 5 cities with the highest 2-bedroom housing wages are Stamford, Norwalk, Connecticut, at $38, Honolulu at $39, Oakland, Fremont, California, which is at $44, San Jose, which is in California, at $48, and San Francisco, which is at $60. So for people earning minimum wage, which could be most millennials stuck in the gig economy, the situation is beyond dire. At $7.25 per hour, these individuals would need to work 122 hours per week, or approximately 3 full-time jobs to afford a 2-bedroom rental at HUD's fair market rent. For a 1-bedroom, these individuals would need to work 99 hours per week, or hold at least 2 full-time jobs. The average renter in each county across the U.S. makes enough to afford a 2-bedroom in only 11% of counties, and 1-bedroom in just 43%. So you can see that most of America, they're having a very difficult time. And this is because we're seeing the wealth effect, where a lot of the wealth is being shot up to the 1%, and the rest of America, they are struggling. What has happened? Well, the full-time, high-paying jobs, they completely disappeared. Now these individuals have 1, 2, 3 part-time jobs, and you just can't work that number of hours to afford anything. This is why people are using the gig economy, or gig jobs, where they're having side jobs, where they're doing things on the internet, selling things in eBay or Etsy or things like that, trying to make ends meet. But for many, it is not working whatsoever. Now, we understand that the housing market is in big trouble. And banks, well, they are pulling back from mortgage lending right now. I wonder why they're doing that. Well, they're doing that because they understand there's going to be major problems, and they don't want to be holding all of these mortgages. They've done this before, and they know that when the next crisis hits, they can't be holding all these mortgages. So the shadow banking system, well, that has become very, very aggressive. And in the first quarter of 2018, banks and non-bank mortgage lenders, the shadow banks, originated around 1.81 million loans for residential properties. In the diversified U.S. mortgage industry, the top 10 banks, shadow banks alone originated 260,000 mortgages, or 14% of the total, amounting to $75 billion. Banks are institutions that take deposits and use those deposits to fund part of their lending activities. The other part is through fractional banking. So they're watched over by the federal and state bank regulators from the Fed on down. Now, since the financial crisis and the bailouts, they were forced to increase their capital cushions, which are now large. Non-bank lenders do not take deposits and thus have to fund their lending in other ways, including by borrowing from big banks and issuing bonds. They're not regulated by bank regulators, and their capital cushions are very minimal. During the last mortgage crisis, the non-bank mortgage lenders were the first to collapse, and none were bailed out. So the top 10 mortgage lenders in the first quarter of 2018 are as follows. Wells Fargo used to be the largest mortgage lender in the United States until fairly recently, but it fell to second place. And who took its spot? A shadow bank. The largest mortgage lender in the first quarter was Quicken Loans. Its total mortgage originations edged down 3% to 73,896 mortgages. So Wells Fargo used to be number one. Now a shadow bank that doesn't take deposits, where they're not regulated, they are now number one. And if you look down the list, you will see that like Loan Depot is number 4. You'll see other ones that are number 5, number 6, and they're all taking the spots of the big banks. This is going to be a disaster when everything starts to fall apart. And the big banks, they knew this. This is why they're offloading all of this to the shadow banking system. So they get hit first and they gobble them up, just like they did in the financial crisis. We understand that the economy is breaking down. The central bank, the banks, they've been preparing for this collapse for a while. They understood that whatever they did back in 2008, where they started to print all this money, this was only going to last for a little while. And they knew eventually it was all going to break down, and all this was going to have to be restarted once again with some type of new system. So they were preparing for all of this. The problem is, the players that they thought that were going to be in position, they're not in position right now. And they thought they were going to have this major event where they can point fingers at different countries and whatnot and cover this all up with some type of war where people wouldn't notice that we were moving to a new system. Well, we don't have that scenario right now. And they realize that time is ticking down. And they realize they can't keep the system going much longer. Remember, the American public is 70% of GDP. It's based on spending. And if people don't have jobs, as we can see, they're not making enough to afford a 2-bedroom, 1-bedroom place, we understand that these individuals are not going to go out and start spending money like crazy. And this is why retail is breaking down. No, it's not going to online. The whole system is breaking down all at once. Now, countries realize that all of this is coming apart. Right now, Russia is selling off a record amount of U.S. Treasury bonds. The U.S. Treasury Department report for April, published on June 15th, revealed that Russia sold around $47.4 billion out of the $96 it had held in Treasury bonds. In March, Moscow cut its Treasury holdings by $1.6 billion. In February, $9.3 billion. And they're continually doing this. Stanley Drunkmiller, the billionaire investor, believes that this is the time when everyone needs to own gold. And he's saying that all other investments are rubbish right now. So he's looking at the situation and he's saying that, yeah, we're in big trouble here and people need to basically insure their assets. And he's saying gold is the way to go. Now, what's very interesting is that Russia is selling off treasuries. Other countries are selling off treasuries, Japan, China. The question is, who's buying them? So when we look at this, we can see that the largest holders of U.S. Treasuries after China and Japan are Ireland at $300 billion, Brazil $294 billion, UK at $263 billion, and the list goes on. So who holds the rest of the U.S. gross national debt? By the end of April, to stay within the same time frame of the TIC data, the U.S. gross national debt had reached $21.07 trillion. This was up by $1.22 trillion from a year earlier. So who bought this $1.22 trillion of new U.S. Treasuries? Someone must have. We know it wasn't the Fed because they're unwinding right now. So where did this go? Well, if we look at this, we see the Treasury holdings fell by $70 billion from the beginning of QE unwind through April. Foreign holdings have only picked up $109 billion over the period, which leaves $1.01 trillion that someone else must have bought over those 12 months. But who? Well, it was American institutional and individual investors, directly and indirectly through bond funds, pension funds, and other ways. So basically, the American people have been purchasing these treasuries. So the American people are holding the debt of the U.S. I mean, this is going to be a complete and utter disaster because once this system goes down and everyone gets out of the treasuries, they're going to be worth absolutely nothing. Look at Argentina and all these pension funds and all these investments and all these things that are wrapped up. They're going to be worth absolutely nothing. And we can see we're getting closer to this point in time where this whole thing is going to start collapsing. I mean, the global bond curve just inverted. And if you look at this, every time that this has happened, what happened to the global economy? We went into a recession. That's exactly what's going to happen this time. So the question is, how do you destroy the central banking system? How do you get rid of the central banking system? Well, you do it by destroying their currency. And I'm talking about the dollar. The dollar is the central bank currency. Look at your dollar bill, the $10 bill. It says Federal Reserve Note. It's an instrument of debt. So right now, the dollar is in demand. This is only because the current system has been propped up by the Federal Reserve, all the stimulus and everything like that. If the Fed continues to cut assets and raise interest rates, the emerging markets and others will look elsewhere for support. The dollar is only valuable to global markets so long as the Fed continues to provide a perpetual supply of liquidity. Major foreign economies like China and parts of Europe have been adopting bilateral trade relations for some time. Rather than intimidating these countries into capitulation, a trade war on the part of the U.S. is far more likely to drive them more closely together. Germany and China in particular have been establishing strong trade ties, and OPEC nations have been much cozier with the East. Yes, we've been seeing this, where countries, because of what has been going on, they are trading with each other, getting out of the dollar, and you have to ask yourself, is this being done on purpose? Yes. Why? Because it's a move to destroy the central banking currency. I mean, right now, the consumers and corporate buyers, we're all sitting on historically high debt levels. In fact, the debt levels right now are higher than they were just before the crash of 2008. This economy can't go anywhere. It's dead in the water. So as the Fed continues to raise interest rates, this debt will become unsustainable and something will have to give. Now again, we have two narratives happening at the same time. We have the central bank where they want to control the narrative. They want to say, oh, the economy crashed because of the tariffs, because of the tax cuts and whatnot. We know that Ben Bernanke's out there saying that the tax cuts are dangerous, but everything else was fine going back over the many years, all the debt and everything else. But tax cuts are the problem of today. But we could see right now that all of this is being done because each side is trying to control the narrative. And the longer the trade wars continue, the more other countries will consider the nuclear option of dumping the dollar as the world reserve or dumping the U.S. debt. When this happens, this will push the central bank over the edge. Again, who's going to control the narrative at this point? If it's done right, well, it could be Trump and the Patriots, where then they can ask for an audit of the Fed, of the central banking system, because he's pushing the idea that the economy is doing fantastically. On the other hand, the central bank is raising rates, unwinding. And of course, he can turn this around and say the reason why the economy fell apart is because they were raising rates and they were unwinding at the same time. And then he can show the history. Look at 2008. The Fed was raising rates and unwinding. He'll be able to control the narrative, just like the central bank controlled the narrative back in the 70s when they talked about gold speculation and all those things. So right now, we can see that both are headed in the same direction, the collapse of the system. The central bank wants to collapse it because their system is dead. They want to restart it, and they want to control the narrative. The Trump administration, the Patriots there, they want to destroy the system because it is a central banking system, and they're trying to push the central banking system out and bring us into a people system. So both are moving in that direction. So no matter what, you need to be ready and prepared for a major collapse of the system. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.